This is More Knowledge, More Wealth with your host, Gabriel Shahin. Gabriel is a certified financial planner and a registered investment advisor at Falcon Wealth Planning. This show does not intend to provide personalized investment advice through this broadcast and does not represent that the services or securities discussed are suitable for any investor. Investors are advised not to rely on any information contained in the broadcast in the process of making a full informed investment decision. Now here's your host, Gabriel Shahin.
Good day, this is Gabriel Shahin, certified financial planner and your host of More Knowledge, More Wealth. Here on every weekend talking about all important topics of personal finance. My job is to go over the knowledge you need to increase your wealth. Now, to the listener, you can always reach out to myself or any one of my colleagues here at Falcon Wealth Planning. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short, and you can click on our Knowledge Center and get this episode or any one of our previous episodes as well through podcasts, Spotify, and iHeartRadio. And you can visit our YouTube channel, which is part of our Knowledge Center, which has so many great videos, almost 1 million views in general, of just talking about all the fantastic ways that you could save money by just doing these cool tax strategies, folks. Now, I'm the president of Falcon Wealth Planning. We are a fee-only, non-commissioned, true fiduciary, folks. We help you with all aspects of finance. It can be as simple as where you are today, helping you with your current goals, if you should move, if you should buy, if you should rent, taxes, estate planning, insurance, investments, folks, you name it, anything that involves a dollar sign, we can help you with. And folks, that's why we're offering a free financial assessment where we'll give you 1 to 2 meetings, 1 to 2 hours of our time at no cost, folks. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We have offices all across the country, folks, and we can help, doesn't matter where you are. Folks, we got the New Year's amongst us. I hope 2024 is going to treat you well, folks. There's always a bunch of things to go over and do prior to the new year, and I'm going to help you with a couple of those strategies, but I want to start off. And by the way, hopefully I had a fantastic holiday as well. I don't want to dismiss Christmas and so on. So let's discuss just some news that came out a couple weeks ago. It was a very disturbing news. I want to share it with you. And I've got a lot of good traction on this on my comments that I posted on my social media channels, Twitter, LinkedIn, and so on. And pretty much it was me blasting JP Morgan. Okay, there was a guy named Peter Dolger. Okay, he went with JP Morgan, okay, like Chase Bank, right? The investment company, the bank. He gave them $50 million. Folks, you heard it. That's $50 million. Think about this. That is crazy, right? Okay. Now, in just 5 years, keep in mind the market has done really well in the past 5 years, right? 2019 double-digit returns, 2020, 2021, 2023, managed that $50 million. JP Morgan, which an idiot could have done better, managed a way for that $50 million to go down to $1.5 million. Yes, you heard it right. That is a substantial loss of 97% of this individual's portfolio. Now, JP Morgan saying, to their credit, right, I'm making fun of them, that they were just following the orders of their client. Of course, now the family is saying, well, he suffers from dementia. There's doctor orders. Well, yeah, I'm sure his mental stability isn't good now after losing 97%. But here's the thing. Is a financial advisor's job to ask you, would you like fries with that? Or is their job to help somebody in their financial situation? Isn't there some level of responsibility, right? You go to a bar, you keep drinking, and the bartender keeps serving you. The bar can get in trouble because they gave you so much alcohol you left drunk and killed somebody on your way home. Shouldn't there be some level of responsibility, right? If somebody sold them, a convicted felon wanted to buy a gun, and a gun shop sold them the gun, and they broke, you know what I mean? And they're telling them, hey, I want to go do bad things. Are you just going to sell them the gun so you can get that quick sale? No. That gun store would get in trouble. My mind is blown that a massive company like JP Morgan, and by the way, we're not picking on them. There's a bunch of other ones that do the same crap. This one was just a massive amount, 50 million to 1.5 million, a 97% drop when arguably that 50 million should be 75 to 100 million. That's why this is getting so much attention, because I got to hear this correctly or read this correctly. They were taking orders from their client. You know, and that's the biggest mistake when people, number one, what do they know? This person, Peter Dolger here, obviously was fantastic at making money or building a company or however he attained his wealth. Fantastic job, and I applaud him. But just because you're great at making money doesn't mean you're good at managing it. People do dumb things. It's very normal. So why would you continue that same path on managing money? Who's the professional? Well, with all due respect, why would you go to a full-service brokerage house just to give them orders? It's mind-blowing. It's stupidity. I'm curious how this lawsuit is going to pan out. I'm really curious. I think it's so important because if Peter came to us, said, Gabriel, I'm looking to spend $1 billion a year. I have $50 million. This is what I'm thinking about doing. I'm like, back up. You need $12 million a year to live on. It's $1 million a month. Okay? You have $50 million. That's a 2.4% distribution. Let's just even say there's 1% out for taxes. You're withdrawing at a 3.4%. Why do you want to take this much risk? I would do as close to not an actual slap in the face, but I would do the most verbal slap in the face saying, you are out of your damn mind. I am not going to invest you in that way. That is the stupidest thing I've ever heard in my life, sir. You know, I'm of course assuming what JP Morgan is saying is correct because that's their defense. Because at the end of the day, the client is the boss. But the question I have to ask you is, isn't it a partnership? Right? I mean, you're hiring somebody, paying them money to ask you to not take advice, to just do what you want. Why did you have to go to JP Morgan? Why couldn't you do it at a Charles Schwab, a Vanguard, an E-Trade, a Fidelity, right? If you want to just give orders, you know what I mean? It's like you go to McDonald's and you give them orders. Go somewhere cheap. You don't go to the nicest steakhouse in town or fish house in town. You ask, what's the special today? They tell you what it is. What's the fish of the day? They tell you what it is. What's the catch of the day? The idea is, it's crazy to me that professionals in our industry point the finger at you when times get tough. Welcome to 2023 and soon to be 2024. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth here. And every weekend, we're talking about all important topics of personal finance. And there's a lot of times I teach you about a lot of things about finance and what you should do to help protect yourself, increase your wealth, and so on. And this one is for you. And that is sometimes you need to get slapped in the face. Yep, you do. It's a very normal occurrence. You know, your parents did that to you most likely when you were younger. Hell, your spouse sometimes does that to you. I'm not talking about domestic abuse. I'm talking a verbal like, hey, dummy, that's a bad idea. Sometimes you need somebody to talk to you like that. But no, we're in this ultra-sensitive society that doesn't allow you to do that. Oh, no, I'm offended. Oh, I'm so offended. You know, I'm offended, you're offended. That's how, I mean, seriously. Sometimes you need a slap in the face. And some of the best clients we have are giving them the slap in the face. I have one of my clients, won't go into details where he works or anything like that for obvious reasons, but he said, and he had $3 million, and his account dropped to like $2.2 million during the COVID pandemic. He goes, Gabriel, I cannot have my account go under $2. I'm like, well, yeah, I agree. That would be terrible. He goes, no, it just can't. If it does, you've got to go all cash. I'm like, you know, you're a very smart individual. That is not a very smart comment. He goes, I just can't see it. It's not going to happen. I can't risk all my money. I go, well, that's not an option. So now I become the aggressor, right? They called being the aggressor. I had to be the aggressor. And I told them, not only will I not sell, but I'm going to buy more of the stock when it's down. And oh, by the way, that's what's the right thing to do. That's what we'll do. And if you don't like it, fire us. Click. Sometimes that's what needs to be done. Today, that individual has well over $4 million. and that's after making a bunch of withdrawals out of his account. That, folks, is a client for life. Was he flight risk at the time? Yes. Did I hang up the phone in his face? Abso-freaking-lutely. But guess what? Now, let me back up. There was about 10 minutes of dialogue. It wasn't a 30-second conversation I hung up in his face, right? After a while, they just wouldn't budge, and I knew it was wrong, what they were doing, and I refused to do it. If you don't like it, fire me. You hired me for a reason. My question to you is, do you have that partnership? Whether on the personal side, whether on the family side, whether on the professional side, do you have that partnership? Somebody to hold you accountable. Somebody say, hey, listen, what you're doing is stupid. Yes, stupid. And it is very dumb. And I will tell you, I told you so for the rest of your life. Do you have somebody like that? You know, if you in fact do that, and once you get it wrong, I will send an automated email to you every single week reminding you how stupid that was and how it ruined your life. Or you could trust people who've seen this movie before. Don't freak out in the movie and walk out. We know how it ends. It always ends with the good guy winning. So my comment to you is, do you have that relationship? Most people do not. And part of this is why we offer, by the way, a free financial assessment. Test it out. It's a test drive, right? You watch a movie, you watch a trailer before the movie. You go to a restaurant, you get the referral from friends or family, or you look on Yelp. That's why that's so successful. Google reviews of a professional firm that you potentially want to work with. You get to read other people's experiences. That's why TripAdvisor is so popular and Expedia. You see how it's been rated. This is why we offer a free financial assessment, folks. Give us a call. We can help in your situation. If nothing else, making sure you might be doing something stupid. 99% of what you could be doing is great, but that 1% could be stupid. And you need somebody professionally to tell you it's stupid. And you know what happens? Bring your spouse. They're going to look at you and laugh. And be like, yep, been telling them that for years. Give us a call, not to pick sides or pick a fight or to get slapped, jokes aside, but to help. That's what we do. And if Peter came to us and wanted to invest $50 million and he wanted to make dumb decisions, we would it's his money. But when he starts to affect his lifestyle and the risk becomes gamble, which is a sickness, it's now our problem. Have us help you to avoid those same mistakes that other people make. Smart people learn from their mistakes. A smarter person learns from others. Folks, our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short. Folks, we're going to go on a quick break. When we come back, we're going to talk about some year-end things that should be done and really just a checklist that is very important for a lot of people. We'll be back after a few words. This is Gabriel Shahin, Certified Financial Planner, your host of More Knowledge, More Wealth. That's on every weekend. We're going over all important topics of personal finance. We're going over retirement planning, making sure you're prepared for retirement, Social Security and strategies, real estate, taxes, avoiding them now and in the future, investments, reducing fees, commissions, and so on, insurance, and estate planning. Folks, we are offering a free financial assessment that you could take advantage of. We have offices all across Southern California, including the Inland Empire. Give us a call to take advantage. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird, or visit our website, falconwealthplanning.com. That's falconwp.com for short. Enjoy the show. We look forward to serving you. Welcome back, folks. This is Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And it is the end of the year. Hopefully you had a fantastic holiday. I just went on a tear earlier talking about how JP Morgan just completely mismanaged somebody's money, even if they were taking orders from somebody. I mean, my God. You're a professional. You had to go to school. You had to get certifications. You had to get licenses. The CFP, you need an undergraduate degree. It takes a year to get that designation. All for what? To take orders from somebody that you know what they're doing is wrong? Like, somebody with $50 million after 5 years, by the way, when the 5 years, just so we're clear, was a period where the stock market was one of the healthiest stock markets ever. Literally only an idiot could lose money. And this person, $50 million, went to $1.5 million. They lost 97% of their portfolio. And people at JP Morgan were saying, hey, listen, this person told us what to do. The family saying this person had dementia. And we hired a company to give help, advice, not to ask if you want fries with that. So Anyway, I did that in the first segment. You should listen to it. You could see me getting all heat and hotted and things like that. But it is towards the end of the year, so I want everybody to have a fantastic new year. But also just want to kind of talk about some year-end checklists of things that maybe you should be doing. I do this every year, folks. I kind of switch it up every time from year to year. So I'm going to go for the first kind of ones here. We're going to have 7 core items that I think you should be looking at for a year-end checklist. The first one is you want to make sure you max out your retirement accounts. Of course, if you have that extra money, that's fantastic. But not just your retirement accounts at work, number one. Number two is the Roth accounts as well. Now, you may be thinking you make too much money. There are ways to still put money in there via a backdoor Roth IRA contribution. I had a few episodes on that. We have a YouTube channel on that, or a Knowledge Center video on that. So these are things that I think should be very, very important to you. So please make sure you take advantage of that. I'm going to take it a step further. For those of you over the age of 72, 73 years old, taking your required minimum distribution. Sometimes people forget to do that. That is another crucial piece, because if you don't, the penalty used to be 50%, 50. Now it is 25%. But here's the thing, they still tax you on the whole 100%. So if you had to take $100,000 out, which means you have a lot of money, you had to take $100,000 out. They penalize you $25,000, but they still tax you on the 100 still. Get what I'm saying? Which means you could potentially lose $50,000 to taxes, which only leaves you with 25%. So almost 75% of it is gone. So where before 100% of it would have been gone because of the same concept and math. Okay. Another option for some people do is just their annual gifting / 529 contribution. These are things that, you're limited to the amount that you could do on an annual basis. So by doing that, which is $17,000, if you're married, $34,000. If you have multiple kids, you give $34,000 amongst the board. You don't have to fill out anything with the government. So that is something else that could be a great idea for you to help people. And here's an idea some people don't do, is instead of giving cash, you can actually donate appreciated stock to them. Now, most likely the kids are in a lower tax bracket. They can sell it, and depending on their tax bracket, if it's 12% and under, they can sell it and pay no capital gains tax. Pretty gnarly, huh? Only loser in this one is our Uncle Sam. Poor Uncle Sam. So, number 4, complete your Roth conversion. That has to be done by December 31st. So your required minimum distribution, I think this year might be the 29th potentially because of 31st might be falling on a Sunday. So just Roth conversions can be important. These are people who say, listen, I'm in a low tax bracket. Hey, it makes a lot of sense. I could take my money from my IRA and move it into a Roth account. So this could be a fantastic strategy for you to be taking advantage of. I see a lot of people that don't do that for whatever the reason may be, but it could be because they're in a high tax bracket. But in your low tax bracket, there's no reason not to do it. And I love doing Roth conversions when the stock market is down. That can make a lot of sense. Just keep in mind it's taxable, right? You have to pay taxes on it. You don't want to do the withholding out of it. You want to pay the taxes at a later time, whether it's through an estimated tax or through come tax season. Another one is just charity, guys. If by this time, if you had a high income year, giving to charity could be important. If you don't know the charity or don't have real immediate desire for it, you can open up a donor advised fund. Those are fantastic because technically the donor advised is a charity. Okay, so you donate to that and you get the tax write-off. I gave a previous episode during the holiday season. I was talking about Ohtani. Okay, the Dodgers new player for $700 million, how he was paying almost 57 cents on the dollar in taxes. Well, if you put in $1 million in a donor advised, you would save $570,000 in taxes for something similar to a Ohtani situation. And not quite because of the agent fees and so on, but you get my point. The idea with all of this, of course, is that year-end charity could be huge for you, and maybe you do have a charitable need that you would like to give. Maybe looking if you're going to be in a continued high years or want to plan in advance, setting up your own charity. Keep in mind, it has to go to charity, but still. I know a lot of charity events, they have like gala parties and they have golf tournaments and things like that, and so sometimes those can also be a write-off as well, depending on how they structure that at the organization. So last part about the charitable giving is take a look also at the qualified charitable distribution. This is a fantastic strategy because your required minimum distribution that I talked about before, you don't have to take it. You can give it directly to a charity. Yet again, this only really matters if you're charitably inclined. I think also I got kind of 2 last ones here. So I think the last real strategy here for number 6 is a flex spending account. Some people have these spending accounts. If you don't use it, you lose it. So this could be a fantastic time for you to go buy a bunch of items that you may need. Yeah, there could be a lot of feminine products. You can get some glasses, you can get orthopedic shoes, sandals. You can get a lot of different things that could be very helpful. Amazon, you could buy through Amazon even. Costco, Sam's Club, those type of areas are FSA approval. You can load up on allergies and you name it. So those are fantastic ones, because if you don't use it, you lose it, and nobody likes losing money. By the way, folks, if you're just joining me, you're listening to Gabriel Shahin, Certified Financial Planner, and your host of More Knowledge, More Wealth, here on every weekend, talking about all important topics of personal finance. And the idea today was originally to talk about just year-end stuff, and then I read some crazy stuff in the news about somebody getting taken advantage of, or at least working with JP Morgan, and just obviously there was a miscommunication there, whether it was on the client side or whether it was on the advisor side. But law will determine who's at fault here, because $50 million dropping to $1.5 million over 5 years, where arguably should have been to 75 to 100 million, is insane to me. But let's switch gears here and kind of talk about an important thing that needs to be done on an annual basis. And I think it's reevaluating your spending. Okay. And because a lot of people don't understand that spending changes. It's variable. There could be a big expense. There could be a big trip. There could be a family reunion. There could be a birthday. There could be many things, a funeral, a birth, a baptism, a whatever. The idea with all of this is taking a look at how much you spend. And some of the best ways to do that, and some people don't like what I'm about to say, but I love credit cards. Credit cards categorizes your spending. It's nice to know, like, oh my goodness, hey, sweetie, we spent $50,000 this year on food. Like, not like Costco, but like restaurants. Like, that's a lot of money. It's just good to know that you did that. Or, my goodness, did you know we spend $40,000 a year on cars? Like our lease and loan payment? Reanalyze how much debt do you have. Analyze how much assets you have. Reevaluate the price of your home. I'm sure a lot of you guys watch it like a hawk on Zillow and Redfin and whatever. The idea is just to know where you stand. What's your net worth? How much do you make? What do you save? Calculate. I save 5% of my paycheck. Well, I make 100. Well, no, sweetie, I thought you made 100 2 years ago. Don't you make like 110 now with the raises that you gotten over the past couple of years? I guess you're right. And you're still contributing 5%, which you maybe should have done for each raise is increase your 401k 1%. Or if you got a $1,000 raise, save $500 into your 401k. You get what I'm saying? You obviously lived without it just fine, assuming that was the case. Reanalyze your situation. Take a look at, if you carry debt balances, what the rates are. Look to see what your cash reserves are. Look to see what future spending is. And you have to save for that. If you have a goal of having 3 to 6 months of cash reserves, 9 months of cash reserves, are you saving towards that? Could you achieve getting to that goal by the end of next year? If not, this is where you should talk to a professional. This is where you should have guidance. This is where every successful financial planner has some type of framework, a worksheet, documentation where you could fill out and see, number one, what you spend, and number two, how you should stay on track, and give you a checklist of the things you need to be doing. Folks, this is why we're offering a free financial assessment where we can give you 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost. So we have offices all over. It doesn't matter where you are. We would love to help folks. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. But we'll give you that free financial assessment where both those meetings will be at no cost to help point you in that right direction. I just see it all far too often. Now, if you're lucky, you could call in and just get the answer right there on the spot if it's a simple question like that. But the idea with all of this, of course, is people are just not sure where they're at. Sometimes people forget. It's like, hey, you make $75,000, your spouse makes $80,000. You guys are bringing like $12,000, $13,000 a month gross. They're like, oh my God, where is the money going? That's the evaluation that is necessary. And I just don't see that happening. Why? Because everybody's busy. Because you got a phone next to you, work never stops anymore. And even if it does, You're nonstop on your phone, whether it's an email that pings you, a text that comes through, or a phone call that comes through. That's the negative thing about a text, right? I love text on one hand. Instead of having a 4-minute conversation with somebody, checking in when you just want to know that one data point, whatever it may be. Hey, did you get this done? Versus, hey, how you doing? Everybody's good? Family's good? Nope, just ask the question. But the problem is you get text now nonstop. You're obliged to respond to them. In addition to that is social media. So I get it. You compound that with the old I'm watching TV, and now some of you may have family, kids, and so on. People are busy. I get it. People are multiple times more efficient today than they were in the 90s. Yet, pay barely went up from the 90s to today. And they're working a lot more. So how about you take a look at your situation as a whole? Not just on a financial situation, but take a look at the goals that you currently have set for yourself and reassess them. It could be something as simple as where you're working, how much you make. When was the last time you tried to shop yourself to see what you're worth? Probably a good time with unemployment under 4%, don't you think? Do you have a partner in place to challenge you, to push you, to have you be better, have you achieve more? Have you looked to make more? Have you looked to do a side hustle, a goal or a dream that you had to start a new business? Making sure that business is even logical. Maybe you're thinking about starting a business and you shouldn't. You have a fantastic situation right now. Maybe you're taking it for granted. I don't know. But what I'm here to tell you is, do you have that financial partner? Most people do not. And yet again, our services here at Falcon Wealth Planning, yes, we're a financial planning firm, and we don't, yeah, sure, we help the rich get richer. I get it. But we also help the aspiring become financially independent. And we are that partner. Our goal, sure, we manage money. Sure, we do a fantastic job at it. But the goal is to help improve our clients' net worth. That doesn't always mean investing in stocks or bonds. Sometimes that means buying a property. Sometimes that means buying a building. Sometimes that means buying a business. The idea is it's about you. And when was the last time you got to talk to somebody that all that matters is about you? Most of the time when you talk to somebody, it's about them. This is about you. If you're looking for that financial partner, if you're wanting help or at least to explore what it looks like I said, we offer 1 to 2 meetings, 1 to 2 hours of our time, folks, at no cost. We would love to help. Our phone number is 855-963-2526. That's 855-96-FALCON, like the bird. We can help put a customized assessment for you and give you the answers that you need right there on the spot, even without hiring us. Because maybe you might like us, and then we can work together. Folks, that was a fast show. Hope you enjoyed it. You can always reach out to myself or any one of my colleagues. Phone number is 855-963-2526. That's 855-96-FALCON, like the bird. Or visit our website at falconwealthplanning.com. That's Falcon, WP.com for short, where you get this episode, any one of our previous episodes as well, and visit our Knowledge Center on our website.